Ladies and gentlemen, boys and girls, children of my age, welcome to another stream. And this one is going to be important, not because we're going to be talking about AI, but we are going to be talking about the market cycles. And with me is the legendary Michael Terpin. He is someone that we all need to know, and especially the Gen Z guys. Um, I was on a call with Michael the other day, and I said that unfortunately, the word OG is become the most used and abused word because if we like someone or if they have been in the crypto space for 3 years, 4 years, we call them, "Hey, bro, he's an OG." But you know what, my friends out there, we have the real OG with us, Michael Turpin. Michael, thank you so much for joining us. How are you doing?
Great. I'm sitting here in beautiful sunny Puerto Rico and tracking all the movements of Bitcoin. It's where it's supposed to be, and I'm looking forward to talking about that today.
Absolutely. I am looking forward to learn so much from you. I only have 30 minutes from you, but the good thing is that we are going to have you every week to understand the market cycle and where the market is moving. First thing, I've been hearing a lot about this word called super cycle. What is super cycle? Can you please explain it? And do you think that is it even a real word that you believe in?
It's certainly a real word. I think it's been used in different contexts by different people. There are a number of pundits right now that think we are already in a super cycle, meaning that it's only up from here, and they're wrong. I wrote a book, I can hold it up here. I think Bitcoin Super
Yes.
Cycle, which came out in late 2024. Simon and Schuster distributes it, and it's available on Amazon. And basically, the context of the book is that there will be a super cycle in the future. And super cycle was not invented just for Bitcoin. The word super cycle goes back to Elliot of the Elliott wave, almost 100 years ago. And he was talking about cycles and super cycles, including a grand super cycle that's hundreds of years where societies change. And Ray Dalio has talked about that as well. So the mapping of cycles in economic behavior go back at least 100 years. And in Bitcoin, there has been a very reliable 4 year cycle, which I think is undeniable. And every 4 years, someone says, "Oh, this changed, now it's broken." And if you look at the charts, it's not broken. We hit the high exactly where we were supposed to, 35 months after the low, and we're on a track to hit the cycle low, which always happens in the midterm years. And so I can talk about that a little bit more. I believe that the super cycle comes at some point when we end up having, because we've had diminishing returns every single 4 year cycle. We went up 100x from the halving after the first halving, then we went up 30x, then we went up 8x. This last time we went 2x. If we continue that, we'll never get $1 million Bitcoin, right? And so at some point, you have to have a raising of the bar of where Bitcoin's high is going to be, and that is when you get what I call supply shock. Other people have called it that in other asset classes too, where you all of a sudden just don't have enough Bitcoin at the time where you have demand. Demand always happens in the bull market. Retail follows the exact wrong directions. They do this in the stock market, they do this in commodities. They FOMO in when it's at the very top, they panic sell at the bottom. And that allows people like me and other intelligent investors to go and accumulate more at the bottom when everybody else has given up on Bitcoin. That's kind of where we're at right now, or at least we still have a few more months to go before we hit the bottom. But we're right now in the midst of a year-long bear market, and you see all sorts of people giving up. But the super cycle is what's going to come to sort of, at least temporarily for a few cycles, reverse those diminishing returns.
Thank you, Michael. One of my favorite people in Web3 is Joyce, who's joined us in the call. And the reason why I call her one of my favorite people is that whenever I meet her, her warmth, her happiness, her energy is amazing. Joyce, we love you too. Thank you for joining us, Joyce. Um, Joyce, the way the market is working, there is so much of misinformation by wannabe creators, influencers, so on and so forth. What do you think one should be careful of while they are taking somebody's suggestion or advice? Uh, what do you think we should look at first?
One of the things I would say is do your research and know your own investment style. Because just because somebody else said to do something doesn't mean that that's the right thing for you to do. Because they may have different risk parameters, they have a different personal situation, they have a different economic situation. So I'd start at the baseline and figure out who you are, where you are, and where you want to go and what you need to do.
Interesting. We have our co-host Sarah here. Sarah is
Hello,
burning
everyone.
with questions.
Ah,
So, Sarah, over to
yes.
you.
Hello, Michael. Hi, Joyce. How are you guys doing? It's so wonderful to share the screen with you. Michael, this is for you. You have seen multiple crypto cycles. This current 2026 run has seen unpredictable institutional control via the ETFs. Is this classic 4-year halving? Is this retail cycle officially dead, or there's more to come?
There's not that at all, and the data proves it. Every cycle, there's been at least one or two pundits saying the cycle's broken. You may recall, if you've been in crypto that long, back at the when the CME first offered futures on Bitcoin at the end of December of 2017, everybody's like, oh, institutions are in. Everything's broken now. It's just going to be up from here because institutions now are going to be able to go and do futures on Bitcoin, and it'll be just amazing how much institutional money rolls in, and it's going to be always up. We're going to hit 100,000 like very shortly. And of course, that was the top of that bubble. And interestingly enough, that I don't know if they timed it, or it's interesting how a lot of critical things, both for good and for bad, happen exactly in the cycle when they're supposed to. So that was the pop of the bubble when CME started futures, and some friends of mine who are also very good market analysts opined that if institutions go long, they're going to go short too, and they know how to play the shorting game better than the whales do, and certainly better than retail. So they're going to go and be very manipulative on the shorts. And I'm a good friend of mine. I mentioned this in the book, Jim Lowry, veteran crypto trader, literally sold every Bitcoin on that day, and he was right. That was the top of the bubble, and he bought back in the next bear market at about 3,000 after selling it at 19,000. And so a big thesis of my book is that you do much better. I mean, obviously, you still do fine if you're just a hodler, right? If you bought 1,000 Bitcoin at the first halving, you spent $12,000, and that 1,000 Bitcoin today is worth about $73 million. Not many other asset classes can beat that. On the other hand, if you, on average, sold at the top, bought back at the bottom, and you missed it by 20%, this is assuming you're in a zero tax jurisdiction like Puerto Rico or Hong Kong or Singapore. Otherwise, you get a factor in the taxes. But if you just on the net numbers, if you took that 1,000 Bitcoin, it didn't sell at 1,200 because that's where it topped out, but it sold it DCAing around 1,000, and then you ended up like buying it back, not at the very bottom 171, but about 250, and you did that every cycle. You would have 60,000 Bitcoin today instead of 1,000, and you can do the math. It's around $7 billion for your $12,000 investment, and if you sold near the top. Even once this last time when it was around 120, you would have turned 12,000 into 12 billion. I can't think of anything that beats that. So
Ab-
my
you know,
thesis is that you need to follow the cycles until they stop working, and they certainly have not stopped working. Just because institutions have bought in, first of all, institutions are still bought by retail, right? So if you look at the ETFs, everybody's like, "Oh, institutions are going to be buying and buying and buying." We've now had, I think it was 8 or 9 days of net selling pressure. Why? Because the price went down. And if the retail people who buy the ETFs are selling, they have to sell. And so ETFs giveth and ETFs taketh away. And they tend to act so far just like dumb retail always acts. They buy at the top, they panic sell at the bottom.
you know, we always say this that if anybody can tell you that they can time the market, are either God or they are just full of crap. uh, you know but then the way that you are mentioning this, of course, you come with the credibility, and you back it up with data. What I need to understand is, do you think for an average retailer, should we just do something like an SIP, like invest or do a dollar cost average, or should we listen to analysts like yourself and time the market? Do you think, can we time the market? Can we really do that?
You can absolutely time the market. You're never going to time it to the day, but so far, 4 for 4, you can time the cycle. You can sell somewhere near the top because all the signals are there. I mean, first of all, time. So the halvings have thus far all been in presidential years, and I don't think that was an accident. I think that was intentional by Satoshi, and I mentioned that in the book and my other writings. And that means that the all-time high has always been the year after the halving. In fact, so far, every time it's been the fourth quarter of the year after the halving. And I said in my book, and I said in a lot of other places, it's going to continue and it's going to be the same this time. Sure enough, it was. The bubble popped in October of the year after the halving. I think next time, depending on when the halving happens, it might pop late third quarter because so far, 3 times out of 3, remarkably, it's actually popped within a few days of 35 months after the low. So if the low happens when I believe it's going to happen, which is around October or so this year. It's following the tracks to do that. Then you would have an all-time high in, say, September of 2029. And then if people are right that the low is actually in February, that's what Michael Saylor says, although to me it makes no sense for a couple of reasons. Number one, you've never had a four-month bear market. There's just not enough time for the market to digest and run away. And number two, capitulation, when everybody gives up and the bottom is in and you build back slowly from there, always ends with a thud and it just doesn't come back for a while. Whereas in February, you had a bit of a V-shaped recovery. You had a sharp, sell off down to 60K, and the next day it was up 11%. And it went higher from there, and now it's lower. So that does not look like capitulation to me or in any other cycle. So I still think that we have got lower to go from here. Whether we go lower than 60 would be interesting because every cycle has been about a year. Last time was a year to the day. The one before was 3 days off of a year. So it's been pretty darn close to a year. And every single time, including the first one, it's gone below the 200-week moving average, about 4 years. So now it wipes out all the gains of the prior cycle. And we haven't done that yet. We came close in February. It went down to 60, but the 200-week moving average at that point was in the 50s. It's slowly moved up. So we literally today could go down to about 61 or so and still go below the 200-week moving average, even though it wouldn't be as low as February. My personal belief is that depending on macro, which is an effect, but not the major effect, that, come September, October, we're going to go down below 60. And it all depends on other factors of whether we go into the 50s or we go into the 40s. The reasons we would only go into the 50s would be the support that STRC, which of all the institutional factors, I think that's the biggest one right now, because there are a number of people who have nothing to do with Bitcoin who are simply investing in Stretch several billion a month. I think it's like 5 to 8 billion a month because they want 11.5% interest. They believe that it's a safe dividend play for now. And that money is all used to buy Bitcoin. Now, how much he buys below his average, which right now he is below the average price that he's had, typically does not buy much below that, although you'd think that would be the time he'd want to buy the most. So that will be interesting because if he doesn't buy much in the lower market time frames, then that cushion will go away. If he ends up doubling down when it goes into the 60s and into the 50s, then that should sort of be enough buying to counter all the panic selling of the ETFs and of what short-term holders are left in traditional retail.
And Sarah, go ahead. If you have a question, go ahead.
I just wanted to ask Joyce. Joyce, you've been with Bit Angels like for more than a decade. I just wanted to know that if a founder can't explain their business model in under 30 seconds, so what do you think? They are unprepared, or or the product is too complex for the current market?
They haven't clarified it enough. They should be able to
Sorry.
have a few word tagline that is a descriptor for their statement or for their product.
Very, very interesting. Michael, the next one is for you. Like,
So
what
add
do
to
you
that
think that
that
Ethereum?
I was going to say, I would also add to that that you have to understand what part of the cycle you're in, right? So, in other words, Bitcoin,
Absolutely.
you know, uh, is the largest crypto asset. And even though some, altcoins like privacy and AI have gone counter trend once they're out, in general, venture funding goes along with the price of Bitcoin in this market. So, if you're in a bear market and you're starting out, you're not going to be able to go out and ask a $50 million valuation because that's what somebody got a few years ago. You have to go in back to basics. I mean, most of the pre-seed and early seed deals I'm seeing now are under $10 million, whereas literally just a year ago, those same deals would be asking for $30 million valuation.
Also, I wanted to add one other note is Michael is the founder of BitAngels. I've been a director for BitAngels and the CFO, or as he says it, the chief FOMO officer. So Michael can also give you more of a background on it. Also, do you mind if
So
I ask Michael a question about buying
Great.
at the bottom?
Next question in the
ab-
markets.
What?
absolutely, go ahead.
Okay, Michael. Okay, so people are trying to time this like, okay, we're going to wait till we get to the bottom. And then when we get to the bottom, we're going to buy. And then usually when they're waiting like that, they're not all totally prepared because, oh, wait a minute, they didn't open the account yet. They didn't do this yet. They didn't, right? Because they're trying to time it so carefully. So, what do you recommend for people that are really trying to time the bottom?
I would say don't wait for the exact bottom possible price, but don't. I don't think that right now dollar cost averaging is a good idea. I think it is on the way up. So the history of Bitcoin cycles has been 3 years up, 1 year down, and so it's fine if you're dollar cost averaging from the bottom or even as you go on the way up. That's fine, but you do not want a dollar cost average from the popping of the bubble down because you're going to be getting a lot less than if you just held on to the cash and waited for an attractive price. So that attractive price doesn't have to be at the bottom, but you sure should not buy anything within a few months of the bubble popping because it always goes down. The first time it went down 85%, the second time 83%, the third time 75%. We've only gone down about 62%, I think it is, from top to the bottom in February. And, we've had diminishing losses along with those diminishing returns. But buying today at 73, the odds are very strong that you're going to have less of it than if you bought, a couple months from now when it's in the 60s. So I would say, but on the other hand, if you bought it today as a dollar cost average, because you didn't want to take any risk that I'm wrong, because there's always a chance that I'm wrong and this time is different for some reason, just hasn't been that way so far. It's still a good price point to get in if you figure that, in my opinion, the worst case for the next bubble at the end of 2029 is about 180K. And the best case, if we have a super cycle, will be around 400, 450. And so 75 still is like, is doubling your money. That's not bad. I mean, I don't think you're going to double your money if you buy gold today at 5,300 or you buy the S&P at like 50 something. I mean, the Dow Jones at 50 something thousand or Nvidia at the current price. So, but I believe that you should go in and say, from your risk reward, are you most comfortable buying under 70, under 65? You want to wait till it goes to 60? I mean, myself personally, and I also have a fund that's based on the book Bitcoin Super Cycle Fund. We'll buy anything under about 62 right now. I mean, anything that is under there. But we sold in the 80s, because we knew we could go and buy it back later, and then we obviously do some options and derivatives around that nature too.
No, for everybody watching us, I will share the link a little later on all the platforms. This is the book that you should actually go and buy. Michael has written this, and it is incredible. But Michael, while writing this book, did you discover some aspects of Bitcoin that perhaps you had ignored earlier or not paid much attention to?
Well, I think if anything, it really solidified the ideas that I already believed. Satoshi in his early writings, had said that as long as the amount of new Bitcoin, sorry, new dollars, new cash, new investment into the Bitcoin ecosystem over any 4-year period between the halvings exceeded the amount of new coins issued, the price has to go up. It's supply and demand. And that's been true so far for every halving. You had $12 at the first halving. You had more money coming in than new coins being issued. So the next price was 674 years later. And the next one, 4 years after that, was $8,700. And this most recent one in 2024 was 63,900. So it's been always up in terms of having to halving. But with the wild volatility that scares retail away historically, has been caused not by math, but by fear and greed. And what the gist of my book, I originally wanted to call it The Four Seasons of Bitcoin, but my publisher liked Bitcoin Supercycle better, which is only part of the narrative, but it's a better title. And it's what people want in the end is how do I catch the Bitcoin supercycle? You catch it by basically investing at the right time of the bottom of the cycle before there's a supercycle. And the Four Seasons of Bitcoin, really quickly, I noticed early on, more than 10 years ago, that the fear and greed that causes the volatility were in very defined quadrants of the 4-year cycle. And they happen in the exact same order and about the same amount of time. Starts with Bitcoin Spring, which is the day of the halving. On that one day, the profitability of Bitcoin miners goes from a little bit, maybe 10, 15%, to in one block, if you're making 10%, now you're losing 40% because you have the same costs, but your rewards are cut in half. You would think that the price would drop when that happens. It actually stays flat because for every miner that's selling, there is somebody who understands the cycles and said, oh, it's going to go up by the next halving. I should buy some now, especially if the price drops. And those counter. And even this last cycle, you ended up having, the price that the halving was 63,900. It went up a little bit, but not over the all-time high. It went down a little bit, as low as 49, but literally 6 months later, it was still about 64,000. When it went up to the last all-time high, which is 73,850 a month before this last halving, that's when Bitcoin summer hit. That's when by even $1 you go over the last all-time high, and that is always rocket ship to the moon. It always goes up, and on a daily IRR basis, the best time to buy Bitcoin. Even if you can buy at a lower price at the first day of Bitcoin winter, you actually make more per day percentage-wise if you're putting fresh capital in the first day of Bitcoin summer. That lasts historically 9 to 11 months. This last time was 11. It's gotten a little bit longer. Spring has gotten a little bit longer. Fall stays about the same, almost about 1 year. And that's when the bubble pops. And so this last time it popped, and again, it's popped 3 times out of 3, 35 months after the bottom. But when it popped this last time in October, everybody was in denial, and then they were like, foaming in when it would like retrace a little bit, and you'd have a dead cat bounce. But, it always has been 1 year to the bottom, and I believe that'll be the case as well. At that point, everybody's given up. I mean, Mark Cuban already sold all his Bitcoin. He said, I don't like it as an asset class anymore, right? He's just the first of many who are going to say that. A lot of people are going to like, no, Bitcoin's dead. It's all AI now. Or Bitcoin is dead. Gold is a much better value. And you're going to have more and more people who are not core believers who are going to use their own data to say Bitcoin is never coming back. Mike McGlure from Bloomberg said he thought it was going to go down to $10,000. I think that's a little extreme. But, you're going to have a number of people. And that's when all of a sudden on the final lag down, and we'll see whether it bottoms out on just simple exhaustion. It kind of topped on apathy instead of like a parabolic run up. So wherever it bottoms out around 200-week moving average around October, people will be like, nobody's interested in buying it. The whales are going to wait for it to go even lower, even though they should know better. And retail is like they already panic sold. They're out. They're like, how stupid was I buying Bitcoin at 100,000? It's now going to zero. And that's the best time to buy because there's no sellers left, and there's no sellers left. You're not going to get dumped on when you buy. And that happened in, end of 20. If you bought after FTX, and to me, the clear signal after FTX was when Genesis Lending ended up going bankrupt because there was all these bankruptcies from the people who, over hypothecated loans into areas that had contagion, particularly domino effect that happened from FTX going bankrupt. When Genesis went down, there was another big bankruptcy. You figure Bitcoin is going to go lower. It didn't. Why? There's nobody left to sell. If there's nobody left to sell, then it's a good time to buy. And that's what happens every Bitcoin fall. And so that's when you then have the longest season, which is winter. Winter's on average been about 18 months. And if we end up, like having the bottom in October of this year, guess where the next halving is? It's actually about, depending if it's March or April, it'll be about 17 or 18 stops. I'm going to point to the data and say it's more likely to happen again than, for whatever reason, interest rates or, Kevin Warsh or the Iran. We've had wars before. We had a macro effect from Gaza. We had a macro effect from Biden's war on crypto. We had a macro effect from Ukraine. People forget this is not Bitcoin's first war. And so I think still that the fundamentals of the halving are the most important thing. And they're playing out like clockwork, the same way they did every midterm year.
Okay, got it. I have so many questions, but I'm glad that you'll be coming back, and talking to all our viewers again. But since I only have 30 minutes with you, and we're almost at the end, and I want to respect that, uh, what do you suggest people who are doing trades on everyday basis? What do you suggest for people who are willing to take the risk of their capital and trying to scalp the market? What would you suggest them?
Well, it depends how much time they want to devote. If they want to do their own trading, you have to go and be tracking things all the time and be putting in positions and sort of waiting for things to happen. I would read my book for sort of some guide points, and then if you want to have someone else manage it, there are places to do that. I mean, I do have a fund for accredited investors only. And I'm also in the process right now of starting a digital asset treasury company, which is called Supercycle Finance. And once it does go public, then any investor can buy into it. But right now we're just in these sort of early stages of funding, and that's only accredited investors as well. But there are a lot of courses. You can go and there's probably 100 people on YouTube, and you have to see which ones ring true to you. I'm not the only person saying that we're in a bear market, but the majority of people are saying that we're in a bull market, and they're wrong. And I think the data proves me out.
Great. My last question is to Joyce. Uh, Joyce, I want to know from you that, um, how do you um, see, or what's your take on the recent institutional adoption trend in Bitcoin? I was told, unfortunately, I couldn't make it, but I was told that Consensus had a lot of suits than DJs like us. But what's your take on that?
It's about time. I'm very excited to see them in the space. I know at Consensus people were saying, there's all these institutions in here. And I said, who do you think paid for the conference? Right? And they have bigger pockets. They can spend more money, but they are also how retail's ramping in and getting into the space, because the older days, or the whole process of getting a wallet was not exactly the easiest thing, but also because people can buy it through institutions, different types of companies and people can utilize it that never had access to it because of how they have it in their financial portfolio.
Got it.
So that part is
I would point out one piece of news today that I think is interesting. It just broke about an hour or two ago. I don't know whose phone that is. And it was Brian Armstrong announced on his X handle at Coinbase that they have now been approved for derivatives in the United States for U.S. investors. And that's been a long time coming. They bought Deribit, which is one of the leading exchanges for like perps and derivatives, futures, options, etc. And as of about an hour or two ago, U.S. And I think that'll have a effect on volume. Might not happen in the short term. It may end up like just having more people short and drive the price lower. But over the setup for the next the next 3 years, I think it's going to go and be very bullish for the space that you're now able to have ordinary investors go and do. You can go, long with some leverage instead of just going on spot. And that's for both institutions and for Coinbase Prime, which is, I don't think it's in retail yet for the average user, but it certainly is for individuals and institutions who at least meet the minimum requirements for Coinbase Prime.
Great. We have come to the end of the allotted time. I already have like 3 or 4 more questions that I want to ask you, but I will do it
Next week.
Yes, yes, we will absolutely do that next week. Joyce, thank you so much. Sarah, thank you so much. Michael
Thank you
Turpin, you're
so much,
truly a
guys.
legend. And for everybody watching us out there, I would highly recommend you to buy the book. Unfortunately, I haven't read it, but I'll tell you why. I would recommend you and myself and Sarah to go and get the book and to read it, because when you have somebody like Michael Turpin come in and speak about his experiences, why not have Michael Turpin as your buddy? Put him in a bag, take him on a bus ride. Uh, he's and then you get to learn so much, because at the end of the day, there is one freedom that matters the most, and that is financial freedom. And we all hope
True.
that you move closer towards your dream of financial freedom. This is Aura 8. My name is Vaibhav Ali. Michael Turpin, Joyce, Sarah, adios. Thank you.
Thank you so much. Thank you,
See you.
guys.
Thank you.
Bye
Thank you.
bye.
Bye.